Welcome to a new episode of Daily Market Mastery. As you noticed, I've gotten a little bit better in terms of stream layout and scenes, and I finally had time to at least initially set up my stream deck to basically manage the transitions better. Also switch the camera, so the camera that used to be for our desk view, which we used to look at the Elliott Wave Theory book, which is probably going to get blurred by the NVIDIA broadcast software, or our one-page cheat sheet is now the one I'm using as primary camera because I mounted the desk cam. So I'm going to share that real quick differently. While the picture is not zoomed in, it's not as much or as far away anymore from me, so I don't have to constantly roll left and right to basically switch between the scenes. Combined with the Elgato Stream Deck, I can actually, with the push of a button now, switch between what I want to show you guys. And and while obviously it's hard to read for you guys what's on the cheat sheet, there is a link down in the description below. You can download that one for free. And you can also find a link where you can read the book for free. Every time we are referencing the book, I will obviously mention the page number for those that have the physical copy. But for everyone that's reading in the online book, I'm going to reference the chapter, and then you'll have to look in the chapter for the right part about it. But yeah, so far or so much about that. Now let's circle back to that scene real quick for a second while I quickly check if the screen share is configured right. Yep, it's sharing, or it would share the right screen. Okay, so today, like usually we aim those shorts or those live streams to be 30 minutes. Today it's gonna be a little shorter because I have a call scheduled at 4. That kind of happened with the time switch over the weekend that got a little bit messed up with the scheduling. But yeah, I'm gonna do my best to get in what we can during the time. So let's share the screen real quick. Here we are on investing.com. I'm gonna quickly move my camera a bit. That's today's pre-market, not super relevant for us, but we can see that the banking sector today, or at least some banks, are recovering a little bit. So they're up quite a lot in the pre-market, but obviously most of them lost even more than that during the last couple of weeks. For us, irrelevant because we're still busy labeling and applying Elliott Wave Theory to the SPX. Quick reminder. So there are a couple tools you can use. You can obviously label on TradingView, which there's also a link down in the description below to... I'm gonna hide that for now. To just create your account, and you can, as said, use that for labeling, but you have zero feedback. Then there would be wavebasis.com, which is great for double checking and for beginners. You can also, even if you use the free trial and then don't end up buying, you can still use their software. You just have a lot of restrictions in terms of timeframes and features that are available, but you can still use it to, for example, manually label and get certain forecasts and predictions in terms of price levels that are super useful and might help you confirm what you came up with your own measurements. However, the ultimate software, in my opinion, still is MotiveWave. There's also a link down in the description below. I'm going to move the camera down here where it usually goes. And simply because it has neat features, like if I got the wrong element. So if I do this, it will automatically tell me that I'm violating the rules of Elliott Wave Theory with that labeling. Now, one important thing we want to keep in mind is that while in MotiveWave we are looking at this from January 2009, the history is obviously longer, and we can see that we basically just are looking at this part, which means when we are labeling the correction, which is what we've been doing the last couple of episodes and are currently in the starting over phase, we actually have to consider that it's not just a correction for this, or not a correction, but not just a second wave that follows this, our wave one, because our wave one is basically 1, 2, 3, 4, 5, or 1, 2, 3, 4, 5. So we're not just looking for a correction that goes maybe till here, but we're actually looking at the bigger picture where it's roughly like this. Again, this part here, I'm actually going to delete that. Might not be accurate because it was created during episode 1, just as a rough explanation of how labeling works. So we are actually more looking at this part here, which means we're expecting a wave 2 that corrects all of this, which means we're actually expecting not just a correction till here, but a bigger one, which brings us probably here. So, and which also means that we are basically everything that's right now happening, or happening since October 21, or whenever we had the latest all-time high, is basically just a tiny fraction of what will make up the corrective pattern that gets us down here, which if we quickly switch to the desk cam and look at the cheat sheet. So the whole 1, 2, 3, 4, 5 that I deleted just basically makes up wave 1 of a bigger degree, which means we're now looking at this small wave 2 part here, which is again not so small overall then in terms of how much it corrects. But that information also tells us that with like, what did we say, 42 plus 40, with 82% probability, we either will see a zigzag corrective pattern or a flat corrective pattern, whereas a flat corrective pattern would result in a new high in wave B. So I'm actually tending to go with like, it's more likely that we have a zigzag, or obviously there are also probabilities for a double zigzag and a double three. Either way, so basically those three are possible, with this one being the most likely candidate, at least in my opinion. And it's going to be hard because we basically don't have a lot of, switching back, sorry. So we don't have a lot of material here to label out a full wave A or so. And it's going to be hard to estimate just how many layers are, or how many degrees are between what we are looking for, which could look something like this, and what we currently are able to label. Because I said this ABC here, if we look at the screen cheat sheet again, so if it's a zigzag, would also have a wave A that again breaks down into another impulse. So that has to look like this, but obviously downwards. And then that impulse would again then break down like this, and so on. And we just don't know how many degrees we have in between there. Which, by the way, if you're really, really brand new to Elliott Wave Theory, yeah, here's your reminder to basically check out episode 1 of the daily market mastery streams. That was like just 4 days ago, because there I'm actually going a little bit more into the basics, so it doesn't all sound like Chinese for you guys, yeah? And with that, jumping back, so back to the screen share and back to motive wave. So in other words, what we said is that we are actually, so yeah, so while from this here 0, 1, our wave 2 is expected to go here, but overall from the bigger picture, the whole thing downwards here, yeah, is going further. Actually should take us pretty much to our starting point back, potentially, yeah. Which means we really, really have to consider that when we want to label out the bigger picture. Yeah, so where do we continue? Basically, we're still set that we say, okay, this is still a second wave. It still should split up into potentially a zigzag pattern, and a zigzag pattern should, as we saw on the cheat sheet, split or divide into an impulse wave, which means the probably likely candidate would be if we just go and say, okay, this might be our wave 1, 2, and then obviously so on the bigger parts here to get a, yeah, so this might be roughly how it turns out, not in time frame, but in price, and which then would put our wave A wherever our 0.5 was. Yep, so those two are then overlapping, and then our wave B would then potentially be somewhere else, and our wave C would then be ideally, yeah, like almost or somewhere in that area, especially if we consider that where do we have it, trend line, that in a zigzag pattern very often wave C is almost identical. Now it's going to be hard because, yeah, so roughly like this. So wave C actually would terminate at, what's that, 980. So we move the trend line, move that one to roughly 980. Yeah. So very often they tend to be identical. Now, if we assume that this here is a 1, 2, 3, 4, 5 impulse wave that is part of this big ABC, then there are a couple of things we can do. First of all, we can apply something that's called Kennedy channeling technique, so KCT, which is something that I covered in one or more of my videos, if I'm not mistaken. So you can check out the videos on the channel as well about Elliott Wave Theory to learn more about that. And worked like this. We cannot do it fully right now because we don't have a lot of stuff to work with. But basically, the first part would be that we have a so-called base channel that consists of our starting point. Channels are a little bit tricky here in motive wave. So our starting point that we have here, and then with the second point with our point 2, assuming this is point 2, which again is something we would have to, or we will have to go into a lower time frame and then actually confirm it and draw a parallel through that. And now, no, that's the wrong thing. So what do I want? I want the regular tool back. Give me my regular tool back. And it did, where was the extend control E, yeah. So that would be now our base channel, assuming that this 1, 2 is correct, and which means our wave 3 would start the moment we break out or have a confirmed breakout to the bottom of this channel. Which obviously we'll have to wait and see how it develops. Now we can switch from the monthly chart here to a daily chart, for example, and try to see if and how we can confirm certain things. First thing in Motive Wave, as usual, we'll have to not move everything, but label our high and low points again, because when you switch to lower time frames, they don't always align super well. We can also make the channel a little bit more accurate here. And that's what we have here. So again, that would be our base channel. The assumption would be, if that is basically then the impulse wave that makes up the ABC, that we have to fit either, and again, quickly gonna go to the desk cam for that, we have to fit either an impulse or a leading diagonal in there. We definitely cannot fit an impulse in there because we would get a rule violation. So what did we get here? It auto-labeled it probably as an ending diagonal, yeah. So, but in this case, we actually can say the tools, Elliott Wave, leading diagonal, and we can just drag it here, and voila, we have a leading diagonal that checks out, which means then this wave B here would need to be a corrective, circling back, forgot, yeah. So basically here we fit our leading diagonal. Why is it not an impulse? Because wave 4 retraces into the area of wave 1, so it cannot be an impulse, but a leading diagonal is also fine. Now we could go further in and try to confirm that as well, but it looks fairly okay. If I, for example, look here, 1, 2, 3, 4, and we just have to check, that might be another leading diagonal here, depending on if that price here ticks higher than here. So if we look here, we have a low of 4,582.24, and here we have 4,595. So yeah, that's also another leading diagonal, perfectly fine. That could be an ABC zigzag. That's again 1, 2. Yeah, 1, 2, potentially 3, 4, 5 checks out as an impulse wave. Wave 4 is then a more complicated corrective pattern, which is the rule of alternation. So because we have a simple zigzag here, this one here is a little bit more dragged out. Overall, probably something like like double 3, or might also be just a zigzag. Yeah, like, I mean, we would have to look into that on a lower time frame to label it better. Wave 4 is again a 1, 2, 3, 4, 5, or could be 1, 2, 3, 4, 5 would also work. Again, if we go to a lower time frame, we could then confirm which one of those applies. So we're good here. And then this here would subdivide into A, B, C. So if we go to label a corrective pattern here, then it will probably check out like this. Again, we could then again dive deeper and confirm that. But so far that checks out, which means that we're here actually in the beginning of our wave 3 of a smaller degree, which should bring us to this breakout to the bottom, yeah, which is actually quite interesting. And we can also on this smaller scale apply the Kennedy channeling technique, so labeled after, I think it's Robert Kennedy from Elliott Wave International, which is, by the way, where you can read the book for free by simply doing this, which again tells us, okay, if this here is, I'm gonna add another impulse labeling here, so that would be 0, 1, 2, and then we have 3, 4, 5. So that's supposedly how it might go, which then again, since that here is our wave 3, which then again, have to zoom a little bit or stretch that like this. And where did it put the 5? Probably all the way here, yeah. So which in turn would then become, I don't know where the 5 is right now, but that would become wave 1, and then again 2, 3, 4, 5. That takes us down to this 3. Yeah, so there's still a degree in between, but we can definitely use the how do we get that to auto scale again? Which button was it? No, save as template. Yeah, like yeah. There's so many tools and shortcuts in Motive Wave that it's hard to keep track of everything and how it works. So does it? Okay, now it's again scaling properly. Yeah. So yep. Okay, fine. So basically that's the current assumption. And if we zoom out to a monthly plan, it obviously looks very chaotic because we will not even see some of our small labels. But it would assume that it checks out that this works as 1, 2, and that we're currently in the process of the subwave. So obviously it will not go like this, but timed or dragged out over time a little bit more. Yeah. So that we're in the process of building out the 1, 2, 3, 4, 5 impulse wave that takes us, yeah, like not saying down here, but that eventually gets us down here. Now, as far as that goes, we're going to quickly consult the book, so Descam, and there, I'm not sure if we have the bookmark still on the value ratio. No, we don't. Then it was around page 100. Yeah, chapter 4, ratio analysis and Fibonacci time sequences. Sorry. And there we have retracements, how much they usually retrace. I mean, those are just examples. They are not guaranteed, yeah. But what's more interesting, there we have that basically how wave subdivides. Again, it's not the guarantee, but if I get Fibonacci, where do we have Mr. Fibonacci hiding? So Fibonacci retracement. And we say, what do we want to know? To confirm, for example, how far we'll go down here. Then we could say, okay, in some cases, wave 1 to wave 4 will make up 0.61. And in other cases, we have basically the case that, what do we have? Still wave 1 to wave 4, although that is with an extended fifth wave probably, yeah? So we are right now, however, only having the first two waves, which makes it a little bit hard to point at because we are right now only with wave 1, and which, yeah, makes it challenging. Do we have a ratio for that shows like wave 3? Okay, there are the ratios for, or the relationships for triangles and other things. 1, 2, 3, 4, 5. No. AB, that's for targeting that we already covered in the last or the second to last stream. Okay, here we have again A, B, C, and 1, 4. Okay, so those are all 6.18. So if we basically check that here, and it's very close, I'm going to zoom in here. I'm actually going to switch back to the daily chart again and scroll a little bit back. Okay, I have to, 1 second, switch the screen so you guys obviously can see it. And yeah, so if we have our Fibonacci retracement here, it's actually pretty much on spot. So we say, again, it's not a guarantee, but more like, okay, in the regular cases, the wave 2 would retrace to the 50% area or to the 61.8. We can see that actually pretty much went to the middle in between there, which is another, I mean, I wouldn't say confirmation, but another indicator for us that actually checks out as wave 1 and 2. And now if we take that to a smaller scale, so if we look at our smaller labeling here, that's the, yep. So here, and yeah, zoom in further, then we can see that here actually our wave 2 pretty much on spot hits the 61.8% retracement, which again serves as an indicator that indeed checks out as 1, 2, 3, 4, 5 as a, again, leading diagonal based on this entering the territory of that. And then here probably we have something like ABC as a zigzag pattern. And now we're here in the progress of developing our wave 3. Now that could turn invalid if obviously this candle here eventually crosses above this point, and then it means that that correction wasn't finished yet. But so far it looks like a relatively nice indicator. And now, yeah, like if we zoom in further on the hourly chart, we can actually, I'm going to remove that Fibonacci retracement, and we're going to add another one real quick. So if we then assume that was our point 2 and this here is our point 3, not 0.3, but that's our new starting point, then we can see that right now we are actually going beyond the 61.8. We saw that we actually hit the 50, very nice. And again, that's why I'm saying it's not a rule. It will not always apply like that. And especially the lower the time frame you look at, the harder it gets to find an accurate pattern. But basically, so far we are still good. Again, not perfect here. Perfect would have been like turnaround like by here, but we're still fine. So even if today we have a positive day, as long as we don't shoot over the current 4039 where our 0.2 is, that labeling would actually check out, meaning that I don't have to close my current positions that are betting against the index. While I might lose a little bit of money today and maybe even tomorrow, as long as that labeling checks out like this, yeah, like I have reason to believe that we are going to go, yeah, not exactly like that. So don't bet your money on like, yeah, like following exactly that path. Which, by the way, in case you haven't noticed, we also now have an official disclaimer visible permanently on the stream. But just so for those that cannot read, everything that I share in this live stream / video, if you watch it later, is obviously my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Yeah, but yeah. That went actually pretty fast, and unfortunately, I'll have to cut today's live a little short. So instead of like 30 to 35 minutes, we're at 22. Mostly because, yeah, why? Because I, as said, have a call scheduled, and I still need to prepare a little bit for that call. Yeah, if you have time, obviously use Motive Wave, Wave Basis, and or just TradingView or a printout chart in your paper and pen to confirm the labeling that I just put on the chart, or to, what's the other word, like invalidate it, yeah, so prove me wrong. And yeah, so that together with like my input, your input, we actually come up with a better prediction of to where the price is going to move in the SPX, so that we know exactly how long we can keep or hold, or how that I can decide better how long I can keep my short positions. And yeah, you guys also get better at Elliott Wave Theory, hopefully. And yeah, but yeah, so circling back to this scene real quick to say my official goodbye. Thanks everyone for tuning in, even if you just lurked briefly or so. Don't forget, if you haven't already, to smash the subscribe button and enable notifications so you get notified whenever I go live. Usually I try to go live at market open, but it will not happen every day. There will, for example, although I might have by mistake scheduled it, I'll have to check, be no stream tomorrow. Yeah, obviously I scheduled it, but I'm gonna change that. So, but there will be a stream on Wednesday, and yeah, and then on Thursday, and then there will be no stream on Friday. And yeah, so I'm gonna quickly change that. So tomorrow no stream, but on Wednesday we will have another stream. Save that. And then I also have to change the date, because then that's then episode 5 on the 29th and not 28th. And yeah, so thanks for tuning in. See you all in another stream, hopefully really, really soon. And yeah.